Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Y'all come on in here. Hey, we kind of slack today, baby. We kind of slack today. What y'all got going on over there on the tube? Where y'all at on the tube? Let me see here.
Tim, I wanted to let you know that the only thing I got was applesauce.
You said apple? Say that again. What you said about applesauce? What you talking
about? The only thing
Marco?
I got from that move was applesauce.
Oh, the only thing you got from that. That man said all he got was applesauce. So Apple didn't go parabolic today?
Definitely not. It didn't budge, man. But I still got 2 days. Who knows?
Stick a fork in it. Stick a fork in it. Hey. Woo, I needed that laugh right there. I needed that laugh. I need that laugh. Hey, good evening to everybody. If this is first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty thank you for always tuning into Tim's Tidbits. If you don't know who I am, oh, you know what? I forgot to do this earlier. I said that my mic be sounding crunchy. So I need to okay, I got my gain is down. All right. So my gain not turned up cause my mic be like sounding mad crunchy. Let me try this. Let me turn this down just a little bit. Check. See, it's still like super loud. Check. Okay. That's better. It's not peaking in the red. Like I'm just looking at y'all like, what is Tim doing? I'm looking at the audio there. Check. It's not peaking in the red. All right. Check. It's not peaking in the red. All right. Check. It's not peaking in the red. All right. So I don't know. Hopefully that helps. I forgot to go in and check my I was supposed to check. I was talking on what's the name earlier. So I'm gonna go ahead and do it right now because I'm going to forget again. Like I checked my software earlier. I checked, there go the mic right there. All right, see the mic is it's just at 100%. It's just at 100%. So it's not like super. Let me see what happened when I do this. Check, 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 check. Check, 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 check. Check, 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 check. Affecting it.
Can't hear you no more.
Yeah, I know. The software is affecting it. So let me put this. What's up, Water? What's up? Check, 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 check. So let me see if I put this at 70. Mic check, mic check, mic check. Okay, if I put that at 70, it's not peaking inside my software. Like the software is not peaking. It's like giving me a good level. It's not like too loud. And how does it sound on the screen? 1, 2, 3, 4 on screen. 1, 2, 3, 4 on screen. It sounds like it's coming through clear. Is it coming through clear on Zoom? Do y'all hear me fine?
Yeah, I can hear you.
Okay. YouTube, do y'all hear me fine on YouTube? Anybody talking to me on YouTube? Y'all ain't gonna talk to me on YouTube? Y'all ain't gonna say something? Oh, let me put on live chat just in case somebody. Ain't nobody gonna say nothing to me on YouTube. YouTube just leave me out there flapping. See how YouTube hurt my feelings like that? You see how YouTube hurt my feelings? Anyway, if you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. Y'all see it behind me. That's just me, Big Spot, if you don't hablo español. And you're in tune to another episode of the Price Section Recap. Yeah, man. Yes, sir. Like y'all can tell, I like my little graphic, my little animation. Y'all know I like my little animation.
I'm about to turn the blender on.
You about to turn the blender on? Hey, I need y'all hold on for a second. All right, I'm back, y'all. Y'all can tell I like my graphic.
Did you see the videos will be the
All right, y'all. I'm back. You know, the adventures of Super Dad don't stop. Y'all know how it go. Yeah, man. Y'all give it up for yourself. Give yourself a round of applause for putting up. You could have been anywhere in the world. You hate me. Shout out to everybody on YouTube that's ignoring me and not giving me any conversation. Shout out Marco is hanging out with me. I don't know Marco, where everybody at? Where everybody at?
Yeah, you're right. It's only two of us.
Yeah, I know. Ain't nobody in YouTube. Ain't nobody on Discord. I mean, ain't nobody in Zoom. Like, I don't know what's going on. Anyway,
Let me check Discord. Make sure it came. It came through because I used Discord to jump on.
yeah. I sent out the bat signal. Oh well, it is what it is. We're gonna go ahead and get into it, man. Without further ado, let's get into it, man. Let's jump over here. Let me share my charts, and we're gonna get into the price action recap. The 6 o'clock start time is an adjustment. Now, Steve, you must be new. You must be new here. Steve say 6 o'clock an adjustment. So, Steve, you must have just came around during Facilitation February. Facilitation February was an abnormality. The 8 o'clock start time was done on purpose during Facilitation February because it gave everybody time to get home from work, get settled in, doing whatever they got to do, and then we started all the streams like later in the evening. But 6 o'clock is the normal time for price action recap. 8 o'clock, I usually be gone, taking a shower, eating dinner, doing something. So Facilitation February was the adjustment. 6 o'clock, the regular time. So, pull up at 6. Now, without further ado, y'all do me a favor, hit a like for the algorithm. And if you ain't subscribed to the channel, please subscribe. Let's jump up to a daily chart. We're going to start out with the daily first because we're going to, you know what we said, we're looking at all of the price action and how it interacted with the prior whatever. Not just that day, how did it interact with the prior day? I'm looking at it on the daily time frame, the 6-minute time frame, you know, and as low as we need to go. So we're going to start on the daily. Looking at the daily time frame, we still got our new week opening gap on there. That new week opening gap is the difference between the close on Friday at 5 and the open on Sunday at 6 for Monday's trading. All right, so looking at the daily chart, what have we accomplished on the daily chart? We talked about it yesterday. What did we say would happen if we take out that high? Who remember? Does anybody remember what we said would happen once we take out that high? That would give us a what? Do anybody remember? Going once?
Leg snatcher?
Close. Not a snatcher yet. All right? Not a snatcher yet because what do we do? All right? We opened up on Monday.
If it ain't a snatcher yet, it must be a Judas swing.
Yes, Judas swing. We opened up on Monday's price. So from Friday through Tuesday, price came down and engaged sell side liquidity. Right? So if we come down, take out sell side, right? And then we reverse back, right? So here we opened up, took out Friday's low, continued down, took out Monday's low, then we reversed and took out the high of the week, right? This was the high of the week, right? So we got a bullish Judas swing, right? Liquidity to liquidity, right? You say, Tim, we haven't taken out any liquidity there yet. We just trading back above daily high. There is liquidity that rests here, right? This is a daily time frame. So on a low, we're looking at the daily time frame to visualize what's happening throughout the week as it transpires in real time. So we have opened on the weekly, right here. That's our open. We've traded below the open, right? Below liquidity on several time frames, crossed back over the open, right? And traded up above liquidity, right? And now that gave us a bullish Judas swing. What does that sound like during the Asian session when you say, hey, I want to see it trade away from the new week opening gap or new day opening gap, take liquidity, cross back over, take liquidity, and then give me an opportunity to participate, be it going continuing up or reversing, right? So seeing it playing out on a daily time frame. So for our daily time frame, we were looking at our 20-day look back, right? Was looking at our 20-day. We started just on Monday and we looked back 20 days, right? And we said that this was the highest high and the lowest low during that time. That is our monthly range, because we look at that. That was last month's high and that was last month's low, right? So for our 20-day look back, the liquidity that rests in our 20-day look back is our monthly dealing range. Now, as I said, since the monthly high is right there at the high of our current dealing range, right? I just choose to look at the current dealing range because it's so close. There's nothing wrong with just using the monthly range as your dealing range. Why? This is a algorithmic dispensation of time. That's an algorithmic dealing range that IPDub understands. It knows that during the month of February, this was the highest point, this was the lowest point, and it knows how to react to the key PD arrays inside that range, right? And since it's such a close proximity to the overall dealing range, I just choose to use the overall dealing range. And if we put that in the fourth grade, right, and we looked at our PD arrays that rest where? At the bus stops, right? We talked about, we're looking at this as acting as a potential order block for the lower time frame. Why are we looking at that as acting as a potential order block for the lower time frame, right? Because when we drop down into the discount, taking out this sell side liquidity, we did not take out that intermediate term low right there, right? And since we did not take out that intermediate term low, and then we came back up, and then so now at this point, when this day over here closed on February the 9th, we created a swing low right here. So at that point, that intermediate term low is technically a long-term low, right? It's technically a long, well, no, not when we formed this low right here. I'm sorry. When we formed this swing low right here, so when February 18th closed, right, this is technically a long-term low, because now we have an intermediate term low that's higher to the right and an intermediate term low that's higher to the left. So now that is technically a long-term low. Why do I say technically a long-term low? Because by definition of the long-term low of having an intermediate term low with the intermediate term low to the left and the right that's higher, right? That's a long-term low. But for me, I like to see price come back up and break structure after forming this intermediate term low. That gives me more confidence in that level. It doesn't have to. That's just how I like to see it play out. Okay. Now, why do I like to see it play out like that? Because if you look at what price is telling you when it does that, it lets you know that in this case, the bearishness is not quite ready to just keep sliding. Okay. And it may be ready to reverse or give a deeper retracement. All right. Why do I say that? Because when we came down and created the dealing range, notice here, we traded back up and came into a premium, into a PD array, a bearish PD array in the premium, a bearish PD array that's in the premium. So we got confluence right here of PD arrays that should send us lower, right? We engage those PD arrays, reject off of them, but fail to go lower. And then we come back up and take out liquidity again. So we're engaging the buy side again. So at this point, we can see that yes, we're consolidating, but price is respecting bullish order flow at a time when it should be expanding to the downside, because we came to a premium, hit a PD array that should send us lower, and we failed to do so. Came back again to a premium, took out liquidity this time at those PD arrays, right? And then came back down, and we still did not take out that intermediate term low that we said. Once we came up here and broke that right there, that gave us more confidence in that low staying in place, right? If only for the time being, until price went and did something else, but it gave us confidence of it staying in place. Then we trade back down, take out the internal liquidity of this bullish dealing range that we've created, and then we immediately came back up. And the whole time we are finding support at the lower quadrant of our dealing range, and for the most part respecting mean threshold of the bullish order block that's residing at one of the bus stops, right? And if we come here, let's hide the overall range for just a minute. I can actually delete that because I got a range down here, right? So if we look here, this is mean threshold of that bullish order block, right? So all of these days here, we're respecting mean threshold. We get this one day where we drop down into the rejection block and don't take out the low, and then we close below mean threshold slightly. And then today we trade down into the wick, right? On the tape reading session, we talked about why we was watching this wick. We come down, raid consequent encroachment of the wick, and then rally up, right? And take out the buy side that we said once we take out that buy side, that gives us a bullish Judas swing. Okay, so for the daily time frame, we're in the discount of the move. We're not showing a willingness to go down, and price is hinting at respecting bullish order flow. All right, hinting at respecting bullish order flow. And you can see it in several ways. We pointed out the ways that we talked about thus far. And then you can also see that whenever we print a down close candle, we're closing back above mean threshold of that candle. Here we printed two down close candles immediately. Then we drop down into a discount. Then we rallied back up, closing above mean threshold of the lowest down close candle. We printed another down close candle. Then we immediately went back up and closed above mean threshold of that down close candle. That's another way you can identify that price is showing hints of wanting to respect bullish order flow. Because in bearish order flow, it should respect up close candles, and in bullish order flow, it will respect down close candles, meaning closing above mean threshold on down close and below mean threshold on up close candles. Okay, and that's where we at on our daily chart. Any question about the daily chart before we move on? All right, y'all do me a favor, hit a like for the algorithm, and if you ain't subscribed to the channel, what is you doing? I see a few people that jumped in here. What's up, Kim? What's going on, Royce? See Lumpford over there. I see AJ over there. Hey, is it AJ? I be messing up your name. Oh, I think it's AJ. I be messing up your name all the time. I think it's AJ. Marco, Marco, what you doing over there? Marco, you left Zoom.
No, I always try to join both and then hit the like button for you.
Oh, okay then.
So
I
you
appreciate
you get views and you get some love.
Yeah,
In a manly way.
Yeah. Trying to, get it in front of more people, man. Get it in front of more people. I appreciate that. That's the whole purpose of the like. That's the whole purpose of the like. All right. Let's go ahead and drop down. We're gonna jump down to a 60-minute time frame, right? Let's look at the 60-minute. And looking at the 60-minute, we're going to start right at the Asian for today, right? So it's hard to see, right? It's hard to see, but this is where we started. This is the 6 p.m. candle, and I don't know if you can see that thin line right there. There's a very thin. It's not really a line. It's actually a little box, and that little box is our new day opening gap, right? It's very small, right? Very small new day opening gap. So all right, I just saw something from a film. Okay, so it's a very small new day opening gap. So real quick, not a whole lot to write home about, right? We had a very nice on looking at the hourly time frame, we had a very nice retracement and then expansion, another retracement, and then expansion, right? Looking at the hourly time frame, it looks beautiful, right? It looks beautiful. That's why when you're studying price, or when you're watching price, and when you're looking to engage with price, you want to do it from a top down. You want your TDA. You want to be trading in accordance to the higher time frames, right? No matter if you're trading based off of a daily time frame, no matter if you're trading based off a 4-hour time frame or a 1-hour time frame as your higher time frame, right? If you stay in focus and you stay aware of what the higher time frame is doing, then it can help you not panic. It can help you understand, when should I be looking to enter? When should I be looking to trail my stops? When should I be looking to take profit? It helps you understand all this based off what the higher time frame is doing, because the lower time frame can feel like noise if you don't understand what the higher time frame is doing. All right? If you don't understand what man, I just looked over there and I seen E-Rock got a red spider with 3 stars. That means she been rocking with the gang as a paid gang member for at least 3 years. That's my first time seeing that red logo. Man, give it up. Y'all give it up for E-Rock. Drop on the cruise down for E-Rock. Yeah, my first time seeing that red logo. Man, I feel going crazy. Anyway, I'm sorry. Squirrel. I get caught on squirrel. Okay, so during the Asian, as we can see, right, we initially went up, right, but did not take out the afternoon high, right? This is your afternoon high based off the prior New York afternoon session right here on that 2 p.m. candle at 24,850 even. We came up and we did not take out that high. Okay, you can actually say pretty much made relative equal highs, and we didn't quite make it up to the new day opening gap, new week opening gap consequent encroachment. Okay, we quickly traded off, right? On the hourly time frame, it's just a clean meltdown, and we came down into the 11 a.m. hourly busy, and this is your bullish order block right here. It's made up of the 8 a.m., 9 a.m., and 10 a.m. candle. We came down into the wick of the last down close candle, right? And then let's see how far did we dig into that candle. Right down to consequent encroachment. All right. So consequent encroachment there is at 24,525 and 3/4. The low on that candle right there is 24,525. So we went 3 ticks below consequent encroachment. Had a nice reaction off of it, showing a healthy respect for this anticipatory reactionary point, right? And then if you're not looking at the order block, you can also look at this right here as a bullish breaker, right? This last up close candle right there, because price came down, price went back up, then price came down, and price went back up. So we got a low, high, lower low, and a higher high, right? And this is last up close. Both these candles here, that's your bullish breaker, right? But we're looking at the last up close candle, and we drop down below mean threshold of the bullish breaker. All right. So then we do the dude for a while. Then after midnight, right? This right here started our midnight candle here. After midnight, we drop down, set relative equal lows, open up the next hour, drop down, attack those relative equal lows, right? Dug down to the lower quadrant of the breaker, drop down to the lower quadrant, or the upper quadrant of the how did I have that anchor? Did I have that anchor weird before? How did I have that anchor before? Oh, something looks weird. Did I have that anchored strangely? I don't know. Something don't look right about how I... Oh, the wick. Okay, that's what it was. Woo, I'm like, wait a minute. We was just looking at the wick. I'm like, something don't look... Yeah, we was looking at the wick of that. We weren't looking at the whole thing because we said we traded into the wick. So we came down to the lower quadrant of the wick, right? Again, when you got discount PD arrays, you want to see that sensitivity as soon as it touches it. Wick, see it touch it on the wick. Institutional order flow entry drills. Anytime you got like low resistance liquidity type runs like that, you want to see that sensitivity, right? So we went to the lower quadrant of the wick, and we also came back down to the lower quadrant of the last up close candle of the bullish breaker, right? Then after that, we traded back up, taking out the short-term high, creating a bullish fair value gap, which got left as a breakaway gap, got displacement away, right? Breaking market structure. And then if we come over here from when we displaced away from this area here, we created a fair value gap. And when we started to displace away, right, we come here from our order block all the way up there to that high. We retrace back down into a discount into our fair value gap, leaving the breakaway gap down there. Okay, from the fair value gap to the breakaway gap, leaving it down there. All right, and then let's go here for a second. Give me 1 second, y'all. Give me 1 second. Give me one. Is there a space there? 475. Nope, no space there. All right. No space there. Boop. I need a 50%. Let me put a 50% in here. I'll just add it right here. All right. So, right, this is like a little cheat code, right, for talk about measuring gaps. So when you're looking at like when price starts to move, displace away, right? And you get like a breakaway gap, and then you form another gap, right? That you anticipate is like roughly halfway in between, right? You can go from like the low and put the consequent encroachment on the gap, and then that can be, you can anticipate, okay, we can roughly go, this is how far price can go. So right there, right, you got there, and then you got a half standard deviation that's right there at that liquidity right there. Now if we're looking at this as the balanced price range, and right, we're anticipating this run right here to be the low, then we wouldn't have like a measuring gap that's roughly halfway the distance of the thing. You want to have your measuring gap be like roughly halfway between where you anticipate price going and where price is. But when you start displacing away, you get that breakaway gap, then you get another gap, and then you can measure, and then that way you can identify how far it can go. In this case right here, it ain't picture perfect because you will want to see it like when we're displacing outside of the range. But I just want to break it down and talk about it because it just came to my mind and I had a squirrel moment, right? So with your you would want to see it like leaving this area, right? Create a breakaway gap, create a measuring gap, and then you will come from the low, right? And then put the consequent encroachment on the consequent encroachment, the 50% on the consequent encroachment of the measuring gap, and then it will give you the target of liquidity where you could go, right? So for example, if we came here and we put it, if we just went to consequent encroachment, and let's just say we was leaving this area, right? And let's just say this was our low, swing low we was looking at here, right? Let's say we had a breakaway gap here, and then we had, and this is eyeballing this, right? That's roughly 50% right there, right? And we had another gap there. You would put consequent encroachment on the gap, right? And then the liquidity that you're resting at, that's your reasonable target for where price can go. Okay, that's how it works. But when I saw these gaps back to back like that, it came to my mind. I said, hey, I want to talk about that, even though it ain't picture perfect. Hopefully y'all get the picture. All right, now what was I? Oh yeah, then we came back down into the during the 7 a.m. pre-market time, right? We traded down into the bullish fair value gap, right? Then ratted up, then we went into our 9 o'clock hour, right? The 9 o'clock hour, if you look at this hourly candle, right, you're looking at it like, hey, it doesn't look that bad. During the 9:30 to 10:30, like especially during like 9:30 to 10:30, price was big trash, right? Price was big trash. And then you can kind of tell by the type of candle that it made, right? We got a long wick on the bottom and a long wick on the top, and they're pretty much the same size. That's giving you a doji vibe, even though this is not a doji, right? Price opened, came all the way down to here, came back to the open, went all the way up to here, then came back down and closed, right? So this is the dynamic. This is like the bulk of the body. This is the body, right? That's the body there. But you had this much downside and that much upside. It's pretty much the same length. So where are you? You're right in the middle of the road. This is giving you high resistance. This is giving you consolidation. This is giving you, what are we really going to do? It's a lot of back and forth inside this hourly candle, right? So just looking at the hourly time frame, it just looked like, hey, it was a nice run, but price got really ugly during this 9 o'clock hour. And then we eventually delivered to the buy side liquidity, And as you see here, we tapped into this hourly SIBI that I had marked out, right? And can anybody tell me why I got that hourly SIBI marked out as an anticipatory reactionary point? Who can guess why?
I think I can get, because that's the first imbalance that they made when we left that balanced price range.
Exactly. The first fair value gap that was made when we left this area right here. So as price, this is the first time we come back, right? So as price trades up, right? You always want to focus on those first. Why are we looking at that? Because if price is still bearish, that should send us back down to Hades. But if price is now bullish based off of what it's done down here, and this buy program is going to stay intact, you want to see some type of reaction off of this, and then us come back up and create an inversion fair value gap, because the inversion fair value gap is going to be built off of that first imbalance, right? Now, like when we first learned about fair value gaps, we just run around looking at every fair value gap that we close back above and say, oh, that's an inversion fair value gap. Oh, that's inversion fair value gap. Okay. Technically, when it closes on the opposite side, it's an inversion fair value gap. But will it be used as an ICT inversion fair value gap? That's where the narrative comes in. Those are the inversion fair value gaps that you want to focus on placing trades off of. Those that's going to be used as an ICT inversion fair value gap. And it's going to be that first imbalance that you create when you're leaving an area. It can be right after a turtle soup. It can be just like here. Price was trading. You say, Tim, there's a fair value gap there, but where's that fair value gap created? Inside of this range right here, right? That fair value gap is created inside this range. This is the first fair value gap that was created off displacement after this turtle soup right here, right? We went up, dropped down, displaced away. That's the first after that turtle soup. That's the first after this whole little consolidation / mini retracement there. All right. Inversion fair value gaps. Broke it down like a champ. All right. That's our hourly time frame based off what we did. We the Asian, if we can find the right one, the Asian dropped down into the afternoon bullish PD array. After midnight, we dropped down, swept the Asian low, displaced away, breaking market structure, right? So the whole London session was pretty much a straight move up on the hourly time frame. That is just a straight move up. We did pause to create an order block there, but it was pretty much a straight move up. Then we got this change in the state delivery there on this 4 a.m. hourly candle, right? Then coming into the 6 and coming into the pre-market at 7 o'clock, we traded back down in there, and then it looks like the New York session on this hourly time frame was just another straight move up. Okay, so that's how we engaged with liquidity. London took out the Asian low and high, and then the New York pre-market retraced back into the range, and then we continued up from there into the daily high from yesterday and a prior day's high, giving us the Judy swing up into the hourly SIBI from the 26th at the 9 a.m. SIBI from the 26th of February. Any questions on the hourly before we move on? Hey, I forgot the stream was earlier than it had been. Hidden Learning Share. I know you ain't said that, Hidden Learning Share. I know you ain't. I accept that from who was that? It wasn't Steve. Oh, it's a different Steve. That's a different Steve. Is that the same Steve from? No, that's a Steve. But the other one says Stevie. So that I accept that from Steve. But you, matter of fact, it's Wednesday. How you even typing right now? You sneaking on the back pew typing again? Put your phone on speaker. Hey, Pastor, she back here looking at YouTube. Oh, that's the same Steve. Oh, Steve on his burner account, y'all. Steve pulled up on his burner account. All right. Hey. Hey, man, let's get into the 15-minute. Let's drop down to the 15-minute time frame. All right. Uh-oh. If I can get on the right screen. While I'm dropping to the 15-minute time frame, y'all do me a favor, hit a like for the algorithm. We trying to get this in front of more people, man. Y'all be like, Tim, why you been saying that so much lately? Because we trying to get it in front of more people. We want more people to, pull up and get these gems. All right? Now, we saw what went on the hourly time frame as far as how the sessions interacted with each other. So now we're just going to jump in here and focus on the New York session. All right? Because that's the session that I trade, right? If other people trade like the London and all that, y'all could be like, Tim, look at the London too in detail, like, and then I'll start doing that. But for right now, just focus on the New York session. If you're wondering why I got all this gobbledygook all over the chart, this is a Fibonacci tool that is pointing out a projection. And shout out one of our very own who was like, hey, Tim, this is where I anchored my Fib tool for projections. And I was just wondering, am I looking at it right? Am I doing it right? And I said, you know what? You are. Right? So basically, what we're looking at here, we're looking at this manipulation leg from the 7 a.m. candle down to the 7:30 candle, right? We're looking at this manipulation leg, right? So once we came here and went into our pre-market, we traded up, dropped down, pre-market opened up, we traded into this 630 SIBI, and then we dropped down, right? We dropped down, created a low, and then displaced away. Okay, so what is that? When we coming to a new something, right? We're coming into a new session. This is our pre-market open, right? Coming into a new session, we immediately drop down, right? And then we reverse, right? Because we came here, made a candle. There's a short-term low right there. Drop down below that short-term low, pop up above that short-term high. What does that give us again? Sell side, buy side. What does that give us? What does that give us? What does that give us?
Judas swing.
Judas swing. A bullish Judas swing. Now that we got a bullish Judas swing, we understand a bullish Judas swing to be a type of manipulation, right? And if we're in a buy program, which we are, prices shifted into a buy program, and then going into a new session, we get a bullish Judas swing, then this expansion down, we know that that was our manipulation leg. So in that case, we anchor our Fibonacci tool from that low and back to the next high, just right back to the swing high. Say, Tim, why you didn't go to that swing high right there? You just go back to the next high, right? This is your high. This is your low. That's the start of 7 o'clock. It creates a swing high. We drop there. That's your swing low. If there was no swing high here, then you would go to that. You'll go from this low to that high, right? But you just go up and to the left and anchor it to the very next high, one swing high back, right? And then as you see, we're looking at our projections. For those who don't know what the projections are, I will pop up the Fibonacci settings. You don't have to go crazy like me and go all the way up to the 11th deviation, broke down into half standard deviation moves, right? Because Michael teaches you plot it out in half standard deviations as far as you need to plot it. And this is your specific targets that you can set to say, hey, based off of this manipulation leg, I anticipate price once I get an entry to expand up until whatever liquidity you're watching that matches up to a deviation. And the safe spot would be if you have a deviation that's right under, that's your safe spot, right? Because that's your target and you're taking your profit just in case price wants to go up there, set relative equal highs, and then pull back on you, right? But the way he teaches it is whatever deviation mark is beyond that target, this is your absolute say. It's not a buy zone, not a sell zone. You can say I'm targeting 25,153 and a quarter as my exit because of what the algorithm did here. That is a algorithmic projection where I can have a high probability of hitting based off of that liquidity right there, right? And then as you see here, it was actually delivered to on this 11 a.m. candle sometime during that 11 a.m. candle on the first 15 minutes of 11 a.m. And then we ended the run at 3 standard deviations with an institutional order flow entry drill inside of this hourly SIBI and inside of that 15-minute SIBI right there, right? All right, the 10 a.m. SIBI, the 9:45 SIBI on the 15-minute time frame, and it's the 9 o'clock SIBI on the hourly time frame. Okay, then you see price pull back down into the high, into the prior high, and found a little support there and start to move back up. Okay, so that's on the 15-minute time frame. We got our manipulation leg breaking structure, traded back down into the BISI, back down right into the breaker, right, back down to this bullish breaker. And then we also have an inversion fair value gap right here, right? You say, well, Tim, we're still instant, but if you look here, right, the imbalance, it's starting to just, we come all the way down, right? We got like a little displacement. We're leaving this area there. So right there, right? So that right there will be your inversion fair value gap right there, because we came back up here and used that same gap to send us down, right? Whenever you're looking at something as resistance, right? Once you get on the other side, you're anticipating it to be support. True resistance turn support, okay? Algorithmic support and resistance. And then nothing can stop me. We're all the way up. After this 9:45 candle, 15-minute went up, engaged the buy side liquidity, and then we just went into a do-to-do pattern, right? And then we slowly climbed our way up during the afternoon and slowly climbed our way back down before closing at the end of the day right there at 2.5 standard deviations away, right? And if we look at our from 9:30, this is our 9:30 candle here, the one with this long wick that looked like a lightsaber almost. You see that doji, right? That doji candle there with that long wick right there. That's our 9:30 candle, right? Remember what I said? The 9:30 time frame was complete dookie cheeks, right? We traded up there, came all the way back down, closed in the exact same spot that we opened, right? Gap down on the next candle, right? Drop down, right? Then we traded back up, sold off. Then we gapped up a little bit, right? Traded down. Then we went all the way up there. So now we came up here, then back down. That's a bearish Judy swing, right? So you get a bearish Judy swing in the midst of a buy program, right? You're watching to see if that becomes a wig snatcher. We talked about that on the live stream today, right? And so looking at our pre-market, right? This is our pre-market high, right? How can you identify, hey, will it possibly be a wig snatcher? This is our pre-market high, right? Pre-market high. And this is our pre-market low right here. Don't need this anymore. I'm going to hide this. We already talked about that. This is our pre-market low. Okay. Right. And so coming into 7 o'clock, right? You let the algorithm establish a range, right? That's our highest high and lowest low going into 9:30, right? So the algorithm has established a range. What do? We going into a new anything, we let the algorithm establish a range, and once it establishes the range, right, now we're going to wait for it to engage one side of the liquidity. All right, so then price inside of our complete dealing range, right? Price went up and took out the high. It engaged the high. So now when we came down and came up, what did we say that was during the pre-market? That was a bullish Judy swing, right? So now this right here is a bullish dealing range. So we shot up and engaged the buy side first, right? So we're coming into the New York session. During pre-market, we get a bullish Judy swing, which aligns with the buy program that we've been in since after midnight, after this 115 sweep of liquidity, sweep of the Asian low, and continuing up, we've been in a buy program, right? So now we got a bullish Judy swing, which goes in line with the buy program. So then at 9:30, we immediately open up and engage the buy side. Is that manipulation? Not in the sense of what we're looking for reasons to buy off of, right? Because we're attacking buy side, right? If you're in a buy program, the ideal thing to do is attack sell side to manipulate out that sell side to give you a chance to get in on the manipulation leg, okay? So we attack the buy side. So now what did we just do? We just extended our dealing range, right? From there to there. Once we extended our dealing range and we came all the way back down and closed this doji, right? Price came here, dropping down, giving us a bearish Judy swing, because at 9:30, we opened here, went up, took out liquidity. That's the highest high after 9:30. That's the lowest low after 9:30, and then we turn around and trade below that low. So now that's a bearish Judy swing inside of a bullish dealing range. So right here, as soon as you get that bearish Judy swing, now you're thinking, is this going to turn into a wig snatcher? Because if you're bullish, right, you're looking for price to pull back to a discount to give you a reason to buy, right? So when you get this bearish Judy swing, you're just looking at this as a pullback to a discount to give you a reason to buy. Shout out Yolanda again. She pointed out the fact that when we came into the pre-market session, we formed a bullish order block right here on the 715 candle. And she was watching this bullish order block for an opportunity to buy. All right. And if we look at this bullet, the open of that bullish order block, right, as you can see, we tap down into that bullish order block, and then price was out of there. Nothing can stop me. I'm all the way up. Gone. Gone. Price touched that order block and got up out of there. I gotta get up out of here. Shout out Philip Hudson. Who be seeing the Philip Hudson videos? Philip Hudson be like, I gotta get up out of here. Right? So now we've come back down. Not only did we get a bearish Judas swing inside of a buy program, we came back down to a discount PD array where we're looking for buying opportunities. Right now, this was not on my radar because when we were studying price, we were only studying price based off of this high, this low, and the 930 open. Right? We were watching price on the lower time frame, and we said price has come down to a discount, so it's not unreasonable for price to want to continue back up because we have come to a discount, right? And that's just what it did, right? So I just said that to say you don't have to be looking at everything as long as you know why you're looking at what you're looking at. Yolanda was watching the bullish order block on the 15-minute time frame. We were watching the 1-minute time frame and pointed out the fact that price had come back down into a discount and manipulated out sell side liquidity. So it wasn't unreasonable to see price go back up and give us that wig snatcher and then continue higher. And as you see on the lower time frame, this is why I said price was dookie platookie during the this is our 930 open, a bunch of booty cheeks up in here. Price was dookie, right? But if you're monitoring the higher time frame, right, it's giving you confirmation that we should be continuing higher, right? And let's look at that really quick, and then we're gonna call it there, right? As you see, let's bring a 15-minute chart over here so we can look at them to get together forever. I'll put that over here. Hey, there you go. All right, so this is the 15-minute chart right here. All right, and let's highlight the 930 over to there, to there. Don't extend. Okay, so we're looking from 930, and we'll push it all the way over to 1030. I was talking about 1030. Well, really don't need to go all the way to 1030, so we'll just go over here to 1015, right? So this is when price was dookie, right here. All right, now looking at price, when you're looking at the 1-minute time frame, all right. Okay, before I get into this, let me get me a sip of water. And while I get a sip of water, y'all do me a favor, hit a like for the algorithm. And if you're not subscribed to the channel, let's go. All right, so when you're watching price and price is just straight dookie platookie, big butt cheeks, right? Sending people to the reset line. Speaking of reset line, Apex got 85% off right now if you use my code below. I don't have a fancy code that I can just tell you. It's some weird Z something code. Right? They reached out to me before, like, yeah, you want a custom code, but I'm like, leave me alone. Right? But like, it's like the third link in the description down below. They got new plans. They got a new page. They did everything new. They said they're gonna be adding stuff, but right now, 85% off. So for the end of day drawdown 50K is like $29.55. For the intraday trailing drawdown 50K is like $19.70. And then the PA activation fee for the intraday is like $76. And then the PA activation fee for the end of day drawdown is $99. Right? So use my link in the description if you want to try prop firms. Now, right? Staying aware of what price is doing on the higher time frame to help you on the world, right? Staying aware of what price is doing on the higher time frame to help you not panic and understand what's going on if you're in a trade or trying to figure out, should I enter a trade or can I trust this trade? Okay, so looking at the 9 o'clock candle, we opened up. I mean, a 9:30 candle. Let's mark out our 9:30 open so we can, right, remember where we at. 9:30 open, Mr. Doji, right? Move it back so we can see those right there. There you go. All right, so that's our 9:30 open right there. All right, so that's our 9:30 open. Okay, and we see here that when we came up, right, and made that high, remember we said we dropped back down into a discount here. So we dropped down into a discount, took out sell side liquidity, right, and then started to displace away. All right. Now, if you look right here, on the way down, and we identified this on the way down in real time, right? What is this right here? What is that right there? Who can tell me what that is right there? Right? That SIBI right there at 9:35. What is that SIBI right there? Who knows?
First.
Say again.
The first?
Yes, that will be your first presentation after 9:30, right? Because this is your 9:30 candle right here. It needs to be after 9:30, right? And then as we come here, we come up, we take out that, and then we displace away. As we leave this little area right here, right, we create this SIBI as we're leaving that area. And then we come up and we kiss it, right? Use the first presentation right there as resistance to send us lower, right? See, we used it as resistance to send us lower. We traded outside of this range. That's when we got our bearish Judas swing. Okay, now paying attention to what's going on, right? This 9:30 candle closes right here. No. 9:30, 9:40, right, 1, 2, 3, 4, right here. Not, I should have known that because it's the same place, right? It was a doji. Come on, Tim. We open and close in the same place. So the 9:30 15-minute candle closed right here. So as this long wick candle there, this is what it looks like on the 1-minute time frame. We went up, pulled down, went up, pulled down, went up, pulled down, created relative equal lows, went up and closed, right? So Platuki, right? Imagine watching this on the 1-minute time frame. On this chart, it just looked like we went up and came back down. But on the 1-minute time frame, we went up, pulled back, went up, pulled back, went up, pulled back, went up, pulled back, and stopped. Right there. All right, so now we have relative equal lows. The very next candle we open and gap down, right? We gap down right there, right at equilibrium of our dealing range. Drop down into the 15-minute order block, which I was not monitoring. Shout out Yolanda. Yolanda was the one monitoring that order block. Drop down into the higher time frame order block, into the higher time frame anticipatory reactionary point. As soon as we traded down into it, now got displacement, bullish fair value gap, right? Traded up into the first presentation, right? Wicked off of it, but did not expand lower. When we touched it this time here, what did we do? We expanded lower. When we hit that 15-minute anticipatory reactionary point, right? We went back up, touched it, did not expand lower, right? Went up, came back down, went up to it again, right? Did not expand lower, came back down into the bullish fair value gap right here. What time is this? This is 9:50. You say, Tim, we traded into the bullish fair value gap at that time on a 9:48 candle. You're right. We did. But we came into a 15-minute anticipatory reactionary point, right? So right here, right at that time, we've hit a higher time frame PDA rate where we anticipate buying off of. Why? Because this is our discount PDA rate inside the buy program. Okay, so if you did not buy as soon as it touched the 15-minute PDA rate, now once we touched it and got this displacement, right, when price traded back down and touched the fair value gap there, okay, if you got picked up there, when price came back up to this first presentation again, what did we do? We repriced all the way through it, right? Yes, we're still respecting consequent encroachment, but we've repriced all the way through it, right? Here, we had an institutional order flow entry drill that sent us lower. Here, we had an institutional order flow entry drill that did not send us lower. And then we came back and traded, we repriced all the way through it, right? Showing a willingness to want to explore higher, even though we closed back down respecting consequent encroachment. So we said, okay, just high resistance liquidity runs. Okay. All right. Then we traded back down and took out a short-term low at a key time. This is the 950 candle. That's the open of the macro window. Let's mark out the macro window for those who don't know what the macro window is. Remember, we're talking about how to monitor what the higher time frame is doing and monitor what the lower time frame is doing to help you determine if you're still on the right side of things. Okay. All right. So this is our macro window right here. All right, let me hide this because I got a lot going on right now. All right, I'm going to hide the new week opening gap too. Too much going on, hurting my eyes. I'll leave the first presentation. All right, because we want to talk about that also. Okay, so when we open up the macro time, we come down, take out liquidity, right? Trade into the bullish fair value gap based off the displacement from when we traded into our anticipatory reactionary point, right? So if you get your Fibonacci tool, go from the high to the low. This is your dealing range after trading into this 15-minute bullish fair value gap. All right. We come back, that this retracement back down here, right? After we set this low, this is when we set the high of the range. Now, this retracement back here is just bringing us down into a discount of our range. For the macro window, we're taking out liquid, we're attacking liquidity and trading into an imbalance. Remember, the macro's job is to engage liquidity that has not been touched or an imbalance, right? So we engaged liquidity that had not been touched, and then now took off, took out the high, right? So we traded from a low to a high. What does trading from a low to a high do? It creates a dealing range. All right. So we created a dealing range. So now, when we created this dealing range on the 1 minute time frame, if you look here, right, that is encompassed inside of this 15-minute candle, right? Now, watching this 15-minute candle, who can remember what we were watching in price over here in price while this 15-minute candle was printing? Gang. Who can remember what we was watching over here in price while this 15-minute candle was printing, and what did we say about that PDub rate? While this 15-minute candle right here was printing, what were we watching over here? Talk to me. Talk to me. Don't be running away from Zoom. Don't be running away from Zoom. Yolanda, talk to me, Yolanda.
We were we were watching to see if it was going to extend over that area.
Nah, too vague. What PDub rate were we watching to the left while this candle was printing, and what do we say about that PDub rate as far as the closure of this candle?
Wasn't it that order block right there?
Nope.
Let me see.
Phone a friend.
I know, phone a friend. I'm driving trying to see.
Lump was Lump there? Jim, was you there?
I don't know. I just got back. I had walked off for a second. What you asking?
What? Never mind. We was watching this 15-minute wick right here. So we were watching this 15-minute wick, and we said if we get a closure above consequent encroachment of this 15-minute wick, that is showing a willingness of price to continue up and maybe engage the daily high and even the liquidity that's higher. All right. So looking at our, I'm going to hide this our dealing range for right now. All right. Because I got a lot going on. And as we look here, we can see, what is this? What in the world is that? Get out of there. All right. So looking here, right? Oh, that was the wick. I needed that. This is the wick, right? This right here was our range when we went up and made this dealing range right here. But if you notice, this dealing range is inside this 15-minute candle. This 15-minute candle, right? It started at, where is it? Here. No. 9:45. Down here, right? So this 15-minute candle started here, right? This is where that 15-minute candle started. This opened. I said started. It opened here, and then it closed. Where's 9:54? Right here, right? This is where it closed. So looking at where it closed, this is the closure of that candle. Is that above or below consequent encroachment of that 15-minute wick right there? Right? It is above. It's above consequent encroachment of that wick. So what is that telling you? That's telling you that when we get this closure right here, that price is showing a willingness to continue up towards the buy side liquidity, right? Is that a good thing or a bad thing for the narrative at this time? That's a good thing. Why? Because we're in a buy program, and we're looking to see if this bearish Judas swing is going to trade above that high and give us a wig snatcher. Once we take out that high, that's our wig snatcher. That's the confirmation that we are going up instead of down And now we can look for reasons to buy with confidence, right? Now, zoom back out. We said that, where's that candle? This is when that 15-minute candle closed. Do we have our wig snatcher yet? No, we do not, right? If you're super in tune and you trust the algorithm already, right? As price pulled back down into the discount of our new range, our new dealing range, right? You could buy the fair value gap. You can buy the order block, whatever you want to buy, okay? But if you're waiting on the wig snatcher, okay? If you're waiting on the wig snatcher to play out, God dog it. Come on, man. Pick the doggone thing. Right? If you're waiting on the wig snatcher to play out, as we start, this starts the new 15-minute candle. Like we said, we pulled back, we traded down into there, right? At 10 o'clock, right? This is the 9:59 candle there. We trade down, right? Trade below the short-term liquidity. And then at 10 o'clock, yow! We take off, right? At 10 o'clock, we immediately take off to the upside, no bottom wick at all, and we get the wig snatcher. We trade above that high. That's our wig snatcher. And then once we get our wig snatcher, we get this deep retracement back down. And we're looking like, man, this is just too much manipulation for me, right? Why are we coming all the way back down here, right? High resistance, right? I do not like trading and stuff like this. This is too much of, let's see how much of a retracement that is, right? Once we got our wig snatcher, right, from peak to trough, that's a 91 3/4 point retracement. Too much for me. Too much. 91 points is too much. It's just too much, right? But what is it doing? Price, after we got the wig snatcher, right? After we got the wig snatcher. So let's do it like this right here so we can see it good. All right. That's the end of that candle. All right, we're gonna make this blue. Right. I'm gonna hide this, right? We don't need this no more. That was just showing us the range on both sides. All right, we're gonna make this blue. Then the next 15-minute candle, we're going, hey. All right, the next 15-minute candle. Make this, what color we gonna make this right here? Nah, not yellow, that ain't showing up good. Purple. Why ain't this showing up? Get rid of this macro window for a minute. Oh, I'm inside the same candle. I'm tweaking. Like, why this ain't showing up? All right, I was inside the same candle. I'm like, why this ain't showing up? Okay, so for this green candle right here, that's this price action. For this green candle right here, that's this price action. Okay. So monitoring our higher time frame. Remember what we said. If we get a 15-minute closure above consequent encroachment of this wick, that's the algorithm showing a willingness to want to trade up into the daily high and possibly liquidity above it. Remember, this was our liquidity we was watching for the Judas swing on a higher time frame, and this was the daily high, right? And this was the liquidity based off of, you know, the order block that Yolanda was watching with our projections. The safe liquidity was just below that, and then the deviation above was like up here somewhere around 151. I think it was up there somewhere because it delivered on an 11 o'clock candle, right? Now we got the 15-minute closure above consequent encroachment, so that's right. We closed here. I said we closed there before, but this is here. We closed here. I was looking at the wrong candle, right? I was looking at like a 954 candle, but this is the candle when we close right there. So we got the closure above consequent encroachment, right? Confirming that price wants to go higher. All right. So then we opened up at 10 o'clock, blast off, right? Blast off. Right? You're thinking, oh, it's leaving without me. I can't trade it. Now, this right here, when we talked about the manipulation, this right here was the manipulation here, because we said it's just too much manipulation to me, because based off what the algorithm has done here, there's no reason to trade below this fair value gap right here outside of just pure manipulation. Okay, so what do we do here? We got hit with a second wig snatcher going into the new hour. So we opened up at 10 o'clock, blast off, take out buy side, immediately reverse, take out sell side. But the only thing that it did, if we're looking here, right, was bring us back down, right, into this bullish order block after it was created. Right. So when we created the bullish order block here, right, remember all we did was just start consolidating right here. Right. We just started consolidating. So you're looking at this right here as time distortion. So we talked about this earlier too. You're looking at this as time distortion. So what we did, we came down, created the order block, went up, took out liquidity, and retraced back down into the order block. And then took off, Campbell engineered relative equal highs, then pulled back down into that order block, and then engaged the liquidity. All right. But looking at the higher time frame, you see we closed above this, showing that price wants to go here. So when we get this deep retracement there, right, even if you trade off of this and get stopped out there, right, you still don't abandon the idea, because now when we take back off, right, it's giving you another opportunity here to continue up. You don't abandon the idea, because the higher time frame is showing you that it's ready to continue up. And then on the lower time frame, right, as you see here, like we said while we was watching price, right, when we came back down, it was like this way too much manipulation. Once we closed back below this first presentation, right, we immediately came back up and closed back above consequent encroachment. So immediately when you see that, you'd be like, okay, this should have been a reclaimed fair value gap, but we immediately got back on the other side. So now we need to use it as support. And right there, boop, use it as support, and we go up and continue higher. So you say, hey, Tim, what if I try to trade that? Then I got stopped out right there. As soon as you see that, because we talked about this on the stream too, come down. Once we swept that liquidity, we immediately close back above consequent encroachment of that. That's a signature letting you know that it's bullish. Right, we go up, create this long wick after we reprice this entire range right there. Right now we're anticipating this to act as support. It's right there at an old high, hit it, and then we continue up. Okay? So by understanding what's going on in the higher time frame and identifying the signatures on the lower time frame, it can help you. And if you got in on the order block trade, right, this retrace back down here wouldn't have shook you out based off of what you saw going on over here. It probably would have, you probably would have been like, I'm just gonna get out because I'm retracing too much. Because 100-point retracement, come on, who's sitting through that? Realistically, who's sitting through that? Y'all got anything for me, man? I'm tired of talking. I think that's it. While I take me a sip of this high quality H2O, y'all do me a favor, man. Y'all already know what I'm gonna say. Hit like for the algorithm. If you ain't subscribed to the channel, you know what to do. So, nothing? Hey, man. That's all I got. What's tomorrow? Tomorrow Thursday? Yeah, tomorrow Thursday. Gang, I'll see y'all Friday for the pre-market analysis. And other than that, hope y'all got something out of this, man. If y'all got something out of it, do me a favor. Hit like for the algorithm. I'm looking over there to see if I missed anything in the chat. I see Tish over. Tish said the wick. Tish was hollering out the wick over there on YouTube. Shout out Tish for talking about the wick. She got the answer right. Shout out Felicia. What's going on, Felicia? Shout out Rhonda Green. Hey man, shout out Rhonda Green, man. Y'all, did y'all know we got a whole author in the gang, man? Rhonda Green be writing books, man. This is one of her books that she wrote right here. I read this book. I read the whole back part right here. I read like 3 or 4 paragraphs on the inside. I read this book. All right. Shout out Rhonda Green, man. If y'all go to rhondagreen.com, right, you can purchase any of her books that she got. She got like books, man. If y'all go to rhondagreen.com, right? See, that's AI Rhonda. That ain't this real Rhonda right here. That right there, that's AI Rhonda, right? So this the book right here that I'm holding, right? Before the Butterflies, I bought that one too, right? She said I bought this one of them books. Like how much it? She said I bought a book for. I don't remember that because I don't be reading books, so I just take out a word. But Before the Butterflies, that's a digital download, right?
All right, today we're going to dive into a really powerful way to think about dating. It's called Before the Butterflies.
That's
and it's
something
all
new.
about trading that chaotic,
got
anxious feeling for
fancy.
some real wisdom and
You
peace.
click on it and it got like little video. Wait a minute. It ain't do that last time. Talk about site upgrades. Right? And then yeah.
I think there's something wrong with your audio. It's very scratchy.
You said the audio scratchy?
Yeah, it's like very staticky and scratchy. And I think it's that way on YouTube also.
You talking about my voice?
On YouTube also.
You talking about my voice?
On YouTube also.
You talking about my voice?
On YouTube also.
Now I'm echoing. You talking about my voice?
On YouTube also.
Now I'm echoing. You talking about my voice?
On YouTube also.
I read like 3 or 4 paragraphs on the inside. I read this book. All right. Shout out Rhonda Green, man. If y'all go to rhondagreen.com, right, you can purchase any of her books that she got. She got like books, man. If y'all go to rhondagreen.com, right, see that's AI Rhonda. That ain't this real Rhonda right here. That right there, that's AI Rhonda, right? Before the Butterfly book, like how a word. But the before
Right,
that-
today we're
Wait
going
a
to dive
minute.
into a
That's
really
something new.
powerful way to think about dating. It's called Before the Butterflies.
That's
and it's
something
all
new.
about trading that chaotic,
Boy, Rhonda
anxious
got
feeling for
fancy.
some real wisdom and
She
peace.
got, you click on it and it got like little video. Wait a minute. It ain't do that last time. It ain't do that last time. Talk about site upgrades. Talk about site upgrades. Talk about site upgrades. Talk about site upgrades. I got loud at one point, but it didn't sound crazy. I got real loud at one point, but it didn't sound scratchy or nothing like that.
Yeah, for me, it's been clear. So I'm not sure what's going on. It's kind of weird that certain people hear it scratchy because you've been clear. For me, personally, on Zoom, it's been clear.
Oh, okay. All right. Cheap cell phone, family. That Jim with his cheap cell phone. But yeah, shout out Rhonda Green, RhondaGreen.com. Go support my sister. She be writing books, man. That's it. That's all I got, man. I appreciate y'all for tapping in with me. If this was your first time tuning in, I like to say welcome. If this wasn't your first time tuning in, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning in. This has been another episode of the Intraday Price Action Recap. Yeah, man. Hey, man. Until the next time I decide to get on Al Gore's hey, where'd my Zoom go? Till the next time I decide to get on Al Gore's internet and share my thoughts that they on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means big spot if you don't all blow a spin, yo. Y'all be safe out here in these trading streets, man. Gone.